Hey everyone, the professor here. We are going to be breaking down a crude oil. Let's start by this trade that happened late on Friday. We posted this both in the members area and also as a video. Awesome job by everyone taking a look at price coming back down, or in this case, I'm sorry, coming back up to this zone right in here. And again, we gave you all of the parameters. And for those of you that stuck it out, that got somewhere in there, we talked about coming down multiple zones, almost 200 points. I know some of you scalped this in multiple occasions. Again, we always talk about looking to secure at least 20 pips at a time because of the volatility with crude oil and what's happening on overseas. So again, congratulations to all of you. Now, in today's video, I'm going to be breaking down crude oil at the different time frames. And so I'm going to invite you to welcome and stay for the entire video. A shout out to the University of Miami and Sylvester Health for this fine head here and also a part of this video. So without further ado, let's jump into our crude oil analysis video. Okay, so first I wanted to start with this interesting article that was just published 2 days ago by Reuters. Again, and it talks about U.S. seeking to buy 6 million barrels for oil reserve by January. Now, one of the things that sticks out in this particular article, which I think is very interesting, and you've heard me talk about, I trade technicals. I don't really pay too much attention to fundamentals, but this is something that you want to keep in mind just based on where oil price is now. And you have the department, okay, the U.S. Department of Energy, so that's some big news there, right, is hoping to buy 6 million barrels of crude oil. Here's the interesting part. The department is hoping to sign the purchase contracts for oil at about $79 a barrel or less. That is an increase from its earlier preferred range of about $70 a barrel, but lower the current benchmark futures price for U.S. oil of around $90 a barrel. So I think that is very interesting for a couple of different reasons. Number one is they're looking to buy at about that $79 mark. What does that tell us? That I think over the next, several months, at some point, if crude oil drops down to that price, they're looking to buy to obviously keep the cost of crude oil down. Now, at the same time, as you go back into the article here, right, it talks about this right here, where their initial projection was $70 a barrel. So now they're looking to settle at about $79 a barrel and lower the current benchmark futures price of U.S. oil to about $90 a barrel. So, I mean, if you just kind of, read between the headlines there, what it sounds to me is they want to buy crude oil at somewhere around 79-ish, right? Maybe a little bit lower, because they understand that crude oil may close or end up somewhere around $90 a barrel by the end of the year. So again, this signifies to me that if price drops, down into the upper 70s somewhere, at that point, right, we definitely are looking to become buyers, because it's even kind of in the article where they're almost settling at the fact that we may see crude oil settle in the futures contracts at about that $90 a barrel. So just something to keep in mind as we go forward. Okay, now let's go ahead and jump into the charts with crude oil. Okay, and as we get started with crude oil, just a reminder that we are having closed captions with subtitles for over 10 different languages. So if English is not your primary language, you can always click on your CC button on YouTube and see the translation in different languages. Okay, so as we jump into this chart here, let me kind of go over here to the right for a minute and kind of grab my pen. And usually when we have a big impulsive candle, usually what happens is we have some form of a retracement and then we have a continuation. Okay, so that's kind of important as we look at this area right in here on the weekly. We see that impulse. We've had that retracement. And so based on price action, right, we may continue to see price then continue to come back down towards, ironically enough, that $79 mark that we just talked about in that article from over the weekend. But of course, we are going to trade what we see and not what we feel. So starting on the weekly time frame, I definitely want to go ahead and start, and you've kind of seen me do this over and over. Let's drop this current Fibonacci level to kind of see where we are at and where we ended last particular week. Now, ironically enough, and this is why we saw that drop I showed you earlier. This is why I put out that video, both for our members and for the good folks here on YouTube watching. And again, I appreciate your support. Continue to like these videos, continue to share these videos, and continue to comment on these videos. So we hit that 61.8 almost perfectly, right? And that was the rejection that we saw on a lower time frame. Again, we hit that 61 and we saw that rejection on a lower time frame. So this is kind of where we are at now on the weekly. And as we kind of look down at the daily chart, I kind of want to just show you how that looked when it comes to on Friday, why we were able to catch those pips or those points that we talked about in that opportunity with the video that we shared earlier. So we see that rejection on there, right? So again, that rejection of the 61.8, which again wasn't the first time that we saw price reject. We had seen price reject back on Wednesday. We saw kind of price reject on Thursday, and then we saw a third rejection on Friday. So again, everything here, is signifying that, hey, we may not go close higher than this 89.90 Fibonacci level, which is also a strong area of resistance, right? And we may at least begin to come back down into this higher 80s area based on this chart here. Okay, you can see here that from the gap that had been created a few Sundays ago, we obviously did close that gap, and then we trended higher over the course of last week, and that's why the week closed out green in a positive week for crude oil. So as we begin to look at this on a daily time frame, I want to kind of bring this in, and again, I just want to kind of remind you that even though I am using this particular chart, the price action should be the same. So when you look at your broker, and I get a lot of questions about, a particular chart that I may use, doesn't matter what that chart is on crude oil. For example, with my broker, and again, if you want to trade with my broker, so you're consistent with the pricing when I put out certain trade alerts, and you want to get the lowest spreads in the market, you want to get the lowest fees in the market. I'm going to leave that link in the video description. Take a look at them. I've been using them for over 7 years. Never had a problem funding the account. Never had a problem withdrawing from the account. As a matter of fact, I would take a withdrawal every Friday afternoon, and it hits my bank account within 48 hours. So I'm going to be dropping that in the video description as well. So again, when you look at what's happening with crude oil, you've got to look at the big picture. And that's why you got to start on the weekly and work down. So don't worry about the pricing on this chart. Look at the price action within your own broker, and it should be the same. Don't worry about the price. You really want to focus in on that price action. So as we kind of get back to the chart here, we are looking at this daily time frame. And again, we can clearly see here that this area here that we just talked about, if we go all the way across, we can see how that area there is definitely an area that has been used for both support and resistance. Okay. And I like to create those into a white. That way we are kind of consistent with the fib levels. So as we kind of work our way back here, we kind of want to leave this area. I like marking that 50 to 61.8 area, because as we move to the smaller time frames, it's going to make a big difference. So this is kind of where we are at right now. And what I want to do is let's go ahead and mark, even though we're sitting on the daily, let's go ahead and mark up this gap so we understand where the gap is. And again, I'm going to talk about the gap here in just a minute. I had so many questions on the last several gaps. I'm going to use a few minutes here, if you don't mind, to talk about the gap and what does the gap actually mean. So when we talk about the gap is nothing more than price closes at $1 amount and opens again on another dollar amount. Now, there's always small gaps. For example, when the market closes between 5 and 6 p.m. Eastern Standard Time, sometimes there's a 1 or 2 or even a 5-point gap. We don't entertain those gaps because they're too small in nature. But on Sundays, depending on what happened over the weekend, any major news, we sometimes will see a whole dollar gap on crude oil. We'll see a $2 gap on crude oil, or we might just see 5 or 6 cents and we completely disregard it. So that's kind of what the gap means. Is if you go back into the chart, it's just a means of where price opened versus price closed. So for example, this price here closed at 88.25. So I'm going to go ahead and kind of get a box here and say, okay, 88.25. If on Sunday price opens at, let's just say 89, right? So the difference between this price opening or closing, I'm sorry, at 88.25 and price opening at 89, that is our 75-cent gap. So that's exactly what the gap means. It means where price closes and where it opens again. Any difference in price, we call that a gap. And again, there's a whole section to trading the gap. You've heard me talk about over and over on crude oil. Unless there's a 30-cent or 30-point gap or more, I do not even entertain it. Okay, and we've seen what happens lately on the gaps. There is a gap. It runs the opposite direction for maybe 24 to 48 hours, and then it reverses back around. So you have some good opportunities to under leverage, which is always the key in gap trading. Because again, the next question I get is, how long do gaps stay open? Well, gaps can stay open for a long time, depending on kind of, how long they want to keep that gap open. So let's kind of go here to the most recent example, and let's take a look at this gap, right? We had this close on a Friday, and then on Sunday, the price opened here. So this open space was the gap. So we went 1 day, 2 day, 3 day, and on the 4th day, the gap finally closed, as you can see by that wick right there. So in this particular example that we're showing you right in here, you can clearly see that this gap stayed open for 4 days. Now, from everything I've backlogged and researched and read and journaled for the past few years, that is usually very uncommon with crude oil. But again, what's happening overseas right now is also uncommon. So you've got to kind of juggle the two. That's why we talk about in our members group over and over, if we do jump into a gap, and I'm usually sharing that information in our private chat feature, hey, we're going to take a gap trade. You have to under leverage. You have to go in with a position telling yourself, would I stay in this position for 3, 4, 5, or even a week later, right? Under leverage. So if it does go against you, it gives you multiple opportunities to enter at better pricing. And then we ride, in this case, the wave all the way down like we did with this gap trade. So that's just a little information and tutorial on gap trades. And again, if you want more information or specific videos on how to trade the gap, go down to the video comments below and drop the word gap, and I'll get that video out to you. So we are sitting here on this daily time frame. Again, as we kind of begin to move through the different time zones, the reason why I do this, and thank you to everyone who messages me that says, me taking the time to give a full analysis, people have learned a lot more about price action by just looking at what the candles are doing, right? And this is why I walk you through these steps over and over. It would be very easy for me just to create a 2-minute video. Here it is. Good luck. And that's it. But I want to be able to show you this because the more charts you see, the more that you can begin to relate to where price moves and what it does, because this is just like a big EKG heart monitor. It goes up, it goes down, it goes up, it goes down. And oil really respects a lot of these zones. And that's why, if you know nothing else, support and resistance is very key, especially with crude oil. So we are beginning to see, let me get rid of this. We are beginning to see here now that we are on this 8-hour chart, that price was kind of bouncing in this area. And again, we can see how it loves coming into this area right here and how it reacts. So, very important that we look at this price action and we say, okay, well, what did it do? Now, For those of you who did trade on Friday afternoon, because that's, one of my rules for not trading, shout out to one of our members who said, hey, I caught the retracement 61.8 area on crude oil for a buy, right? Even though crude oil was selling, this individual basically took this retracement from this bottom to this top, right? And took this wick up, which in a 5-minute time frame was between 88.43 and 88.15, almost, right? 60 some odd points up on this retracement area. So you see these fib levels works so good at all the different time frames and all the different levels. And so if you have not yet had a chance to see how to trade crude oil with fib levels, if you stay to the very end, I'm going to make that video available to you right on your screen, where you'll be able to click it and you'll be able to watch that training video that I did, both for our members, and it's also on the same playlist if you want to go to that playlist as well. So as we jump back into the chart here, we begin to look at, okay, what has price been doing? Let me get rid of this fib level. And then now let's walk down to our 4-hour time frame. So in our 4-hour time frame, again, you can see the importance of this bottom area right here. All this rejection here. We had these 2 rejections here. Here it was resistance. Here it was support. Here it was support. So again, we are gapping in a very crucial area as to what price may or may not do. Okay. So again, I don't put a lot of stock in what's happening right now with actual candle patterns. They work maybe 50% of the times. So we're going to wait for the price action to develop on the lower time frame before we really decide where we are going to go with crude oil. The initial analysis, just looking at this, is we are not going to go any higher until we get a candle to close up in this area. So that's just the first thing that I just want to get that out of the way, right? We're not going to go any higher than $90 a barrel until we close above $90 a barrel, right? So we are back in this crucial area where the last time we came back up here, we dropped. We came back up here, we dropped. We came back up here and we dropped. Now the question is, are we going to continue to drop? Are we going to stay in between these 2 zones? Or are we eventually going to go higher than $90 a barrel? Well, that's why price action is going to tell us that, and we're not going to try and guess. We are going to watch to see what happens. So now let's begin to develop a little bit deeper game plan as we go into the 1-hour time frame. Again, here's our candle that needs to close right above 90, and I know here looks a little bit bigger, above 90, above and close before price will go any higher. We've established that this is our gap from our close here, and we established that this is a very strong area of both support and resistance. So as we look at this, we may just stay in this area here for a bit. Who knows, right? The gap is going to tell us. We may just stay between 90 and 88 for a while, which is great because it gives us great scalping opportunities as we do inside of our group. But we are going to expect a breakout of this area at some point. Okay, there will be a breakout in this area at some point. So as we kind of drop back in here, let's go to our 15-minute time frame and let's begin to evaluate what we are doing here. Okay, so as we look at the 15, and I am going to delete this line right here, we can see here, right, that price is in this little area here. Now, if we look over to our left, and again, the gap is going to change things, but if we look over to our left, price has come here before and then rejected. Okay, so now on the 15, I do want to put a small area right in here. I need to look at that area on the 15 because it has acted as previous, let me grab an arrow, it has acted as previous resistance, right? So we're approaching that area there, right? So again, we can't ignore the smaller time frame support levels as well, right? It's not going to hold as strong as the bigger time frames, but we also cannot ignore it because you would not want to put yourself in a position to take a buy here without this price closing above here and then maybe coming back to retest it, because then this can happen, right? And what happens in a lot of cases, we see upward movement. We don't understand that there's a zone in a smaller time frame. We go in for the buy, and then price melts, and we're wondering why we are stressing. So we need to allow that price to come back up. Now, as we kind of begin to hone in here, right, we now know that if price is going to go higher, it's going to have to first close above here, right, and then maybe give us back another direction in here, and then continue back into this area. Now, again, we're not ignoring the gap, but we understand that price is going to open up either higher or lower depending on the gap. But this is a scenario for price to then come back up here to our next area where we've seen some of that wicking happening, which would be 88.86. Okay, so that's a 50 points. If we break above 88.36, we should be visiting somewhere around this 88.86 area. And again, remember, you've heard me say over and over, this is never a line. These are going to be areas of support or resistance based on maybe 5 or 6 points to either direction. Okay, so we want to trap price in there. And then we do know that on a larger time frame, because of our fib levels, right, these are lower areas that we have to entertain, right? So I think we're going to be kind of treading in here for at least the first few days of the week when it comes to crude oil. I don't see us, unless we have a huge gap up because of something that may happen between the rest of today that I'm recording this video on Saturday and tomorrow on Sunday, that we would gap higher than $2 or $3, or that we would gap lower than $2 or $3. So the safe bet as we begin to look at this, and I want to give you this last piece of analysis now, is I want to make sure that as you are looking at crude oil, that you realize that you don't need to trade every day on crude oil. Let the pricing come to you versus you chasing the pricing. Sundays is not a trade day for crude oil unless there's a gap large enough that you want to invest in, and you understand, like we talked about, you're going to wait for that price to close, right? Under leveraging and not over leveraging. But outside of that, Sunday is never a good area to just say, okay, it's at support, let me sell crude oil. It's Sunday. There's going to be fake outs. Sunday is specifically if there's a gap worth enough. If not, let oil move during the next London session. And as a US session trader, it can begin to tell me already what it's going to do, and I can see the latest price action. I'm just not going to chase a trade in there, right? There are weeks that I only trade Wednesday and Thursdays on crude oil because that tends to be the best setups. The first few days could be a lot of fake outs. Even though as a scalper, I find opportunities to cash in on those days, Mondays and Tuesdays. You don't have to trade every day, especially if you're new to this. Let the trade come to you. Find those bigger areas of support and resistance, right? And let price come to those areas as we did up here. We allowed price to come back up to a strong area of resistance, and why we were able to catch this downfall. A lot of this, you don't know what's happening in this area, right? But when price came up to this area of resistance, it was a no-brainer that it was a great high probability trade, and that's why it melted down. Anything here was a lot riskier, right? Even though we had someone to take this Fibonacci level up 50 points, right? Hey, with a tight stop loss, it's worth the risk because that was part of the trading plan, meaning we trade between the 61 and the 88 in our group all the time. And that's why we're very successful, because we've studied it, we've seen it, and we know what happens. So as we look at this 15-minute game plan, let me just kind of show you, leave you with this here when it comes to where price is at, even though this will be unvalidated with any type of gap movement, right? We are seeing that where price rejected here was not only that area of resistance, but it was also around that area that we talked about, the 61.8. So in this scenario here, if there was no gap, if it wasn't Sunday, right, we would be looking to take crude oil back down to at least this 0-0 line back in here. But again, because the dynamics of Sunday, because the dynamics of a possible gap, I just wanted to show you that chart there to kind of show you that's the way we approach crude oil. We put ourselves in a high probability trade based on different factors. As you can see on my chart, there are no indicators. We're just using straight support and resistance, and we're looking at price action, and we use fib levels a lot. And again, that video is going to be made available to you in just a few minutes here at the end of this video. So again, if you've got some value today, if you saw that this crude oil setup has opportunities limitless. If you understand that you can grab, 15 or 20 points on crude oil and do that 2 or 3 times a day, right? You will be very successful. Even if you only grab 20 pips or 20 points a day, that was all you need, because as your lot size increases, you don't have to go out and do more trading. You just have to stay consistent. So for all of you that have joined my group that are brand new, you're starting with $100, $200. That's awesome. That's exactly what I did. Just be consistent. Grab 10 pips a day. Do that for 2 weeks, then grab 15 pips a day, and do that for 2 weeks, then grab 20 pips a day, and do that for 2 weeks. That consistency will build muscle memory, and you will be in this game long term. Okay, so that's kind of the full crude oil analysis. I want to thank those of you who keep messaging me with all the positive vibes and positive messaging. I know I've gotten requests for gold, for natural gas, and for some of the indices. I promise you that as I have more time, I'm going to try to do those through YouTube Shorts, quick analysis. I really want to keep the longer analysis for what the majority of our group is trading as their number one preference, which is crude oil. But I will be doing some shorter types of analysis on gold and on natural gas, and then of course on some of the indices as well. Okay, I hope you got some value in today's video. If you did, you can definitely support this channel by hitting that like button. If you're brand new, consider subscribing, and also hit that notifications bell, because that's what tells you that I just published a new video and you don't catch it too far in advance. Because sometimes when I publish a video, there is a trade setup that's happening within maybe a few minutes, within 30 minutes or an hour, and you do not want to miss that setup because you don't have your notifications turned on. So make sure your phone notifications for YouTube pops it up on your home screen. Make sure your YouTube notifications are set to all. So whether it's a post, a long form video, or a short form video, you will get notified when the professor publishes to you. Okay, thanks for watching, and I'll see you on the next crude oil analysis video.